Hey, I'm Ryan Phelan, and you're listening to the Epic Phelan Podcast. Today, I talked with investment advisor Todd Schmekel about balancing risk with growth, the importance of diversification, and how to make investments that let you sleep at night. Welcome to another episode of Epic Phelan, and today we have with us Todd Schmekel. Welcome, Todd.
Hey, thanks, Ryan. Thanks for having me on.
All right, so Todd, what we do in Epic Phelan is we bring in people from all sorts of different walks of life, all Calgarians, talk to them about the different things they like about the city, the different things that they do for work and for their career, and we do that over a game of Jenga.
Cool.
Right on. Just sort of makes it interesting and gives a little bit more of a dynamic to the interview.
What happens if I lose?
What happens if you lose? You forfeit your soul to Epic Phelan.
All right, well, I better win then.
Okay.
Not much soul left.
I know. Well, I was like, what am I lacking on? Okay. So anyway, first of all, tell me a little bit about yourself. Like, what do you do?
So a little bit about me. I used to be a teacher a long time ago. I worked in school divisions. I ran some school divisions. I was a principal, but in the last 5 years or so, a bit more, I've been a financial planner.
Wow. Okay. So financial planning. Tell me a little bit more about that.
The way I think of it is that everybody's got some goals and everybody wants to get somewhere. So you start thinking about where you want to get, talk a little bit about where you are today, then where you want to get to, talk a little bit about how you could get there using whatever resources you are currently using. We talk a little bit about how we might rejig those resources, things we might do differently, what other types of investments we might use, and then about how we would work together to make sure you stay on track for the rest of your life, but make sure that you reach your goals. They're your goals, they're not mine.
Okay. So what would be a good age to really just start thinking about investing? I know a lot of people I know probably don't do a whole lot of investing themselves, but what would be a good age to start thinking about this?
I think any age is a good age. Really, people always ask me, when should I start investing? You should start investing when you have the money.
Yeah.
And you don't have to have a whole bunch of money. Everybody thinks, I need $500,000 to start investing. I work with people who are saving as little as $25 a month, up to people who are saving millions of dollars. It really just has to do with you and where you are. The younger you start, the better. And the way I work, my practice is there's lots of education involved, so you don't have to come to the table knowing a whole bunch. And I think that's the fear for most people, is they're worried, I don't know enough. Just come. I do a lot of educational seminars. Just having a conversation is always easy and always free.
Oh, nice. Like, what would the difference be between going to you and going to an investment person, say, at your bank?
So I think the difference between myself and a person at the bank is generally, you can probably tell from my voice, I'm old, they're young. So generally speaking, people are quite young. They're just really new to the field. They have a different certification than I would have. They have MDFA certification, which means that they're certified to sell mutual funds, essentially. I have IROC certification and insurance certification, so much higher level of certification. Additionally, I don't have any product to sell. It's a plan-based, and so I don't really care what people buy, provided it fits some criteria. It fits their plan. It's what a reasonable or rational person would do. It's potentially going to make money, and it's going to help them reach their goals. Whereas if you worked at a particular bank, let's just call it the Green Bank, you got to buy the Green Bank's product. If you go to Ford, you're going to buy a Ford truck. You're not going to buy a Chevy there. And so that's a big difference. There's no shareholder involved in my business, so I don't have to kick money upstairs to anybody. My plans work around the people I work with. I think those are probably the two big differences. Additionally, there is just so much more product or so much more possibilities in the financial planning world that are available to people than just one line or one company's goods. So I work with tons of companies, thousands of them.
Yeah. So if somebody wanted to invest like in stocks in just like one company, could they come see you for that as well?
Yeah, they can see me for that. I do some of that, but generally speaking, we try to build balanced and portfolios that keep as much eye on the downside about losing money as we do about making money, making sure that people are, think about a teeter-totter. When you were a kid, you rode a teeter-totter. One kid gets on the end, he's bigger than the other one. If you go up in the air, your portfolio's out of balance. We want to keep you in balance according to who you are and the types of investments that work for you. Stock is certainly a part of that. I work with lots of people who are stock buyers.
Okay. All right, so let's get started with this Jenga here. Do you want to go first, or do you want to go second?
I'll go second. I'm looking forward to this.
Okay.
I'm kind of hoping it falls right now.
Do you know what? It just might. It's.
I don't think I've ever played this before.